Joining us now is Potomac Wealth Advisors founder and president, Mark Avallone. All right, Mark, so I'm not going to ask you to comment on the Goldman report other than when I see that every single hedge fund is buying the same 3, 4, 5 stocks, which also, by the way, are the same 3, 4, 5 stocks that are the top 30 or 40% of most of the ETFs that our audience uses, I wonder what happens if and when those stocks begin to get sold.
Well, there is a lot of momentum going into the same names, and we've seen that for quite some time. This is not just a brand new phenomenon. But look, some of that is justified. We've had a lot of good news. Microsoft winning a big cloud contract. We have great news out of Apple. There's really momentum now even in Facebook, despite their privacy issues. And we've been positive on tech and continue to be. Just because money flows there doesn't mean it's a net negative. I think we're seeing the underlying and residual effects of that huge tax bill trickling through the economy. It's going into the strength of the consumer, driving demand, and the Fed has taken itself out of the game. This is a confluence of events that's driving stocks to the favorable position.
Is there any, though, concern at all, Mark, just from a macro perspective, that this overcrowding, and by the way, that's a word Goldman Sachs used in their report, not my editorializing, that this overcrowding perhaps in these few names, if and when they start to get sold, if they're dragging the market up, it would make sense that if people finally realize or think these stocks may be overvalued or they've made their money, how can the market stay up if those names begin to get sold? Now, maybe they never will, but what if they do?
Well, they will. Volatility is inevitable, and it's going to be sharp, and it's going to swing fast. We've seen that more and more with the increase in program trading. I think investors are a little complacent now and a little more optimistic than they otherwise should be. Valuations matter. We're above the historical forward PE average. When we look at that, historically, the next 5 years have muted or even negative returns. And I think right now we're only looking at the positive side of the good news, and the good news is out there. My concern is that investors who otherwise wouldn't be in risky assets, who wouldn't be in stocks, or looking at the gains in those large cap tech names, the market favorites, and saying, I want to get in here, I want to make money. And then when the market has these sharp, inevitable pullbacks, there's a knee-jerk reaction. That would be one of my market concerns right now.
And how likely do you think that is, Mark?
Well, I think that if the Fed stays on the sidelines and we have stability out of Washington and we get a trade deal, that's a good environment for stocks. The problem, and there's a lot of uncertainty in that, it's not really looking good for policy out of Washington. The 2 governor races switching to the Democrat side really don't bode well for the president, the impeachment hearings. And we've heard what some of your market commentators say, how far stocks could drop if there's a change in administration. That's a huge overhang. It's going to be a huge overhang in 2020, at least for stock prices. And I'm not sure the trade deal is going to be robust at all. If we get anything, it's more of a trade truce. So I think investors are closing the eyes to big macro risks. And then you also have some company-specific issues that could surface. So I think investors should continue to invest, but not think Wall Street's a one-way street.
All right, well said and good advice there, Mark. Mark Avallone, we appreciate it. You have a great day, Mark. Thank you.
Good to be here.